Section 70120, limitation on individual deductions for certain state and local taxes. This is another big one. This was a huge argument between the House and the Senate. So in general, Section 164B6 is amended. One, by striking before, again, that's expiration date, by striking 10,000, 5,000 in case of married filing married filing separate, and inserting the applicable limitation amount, half of the applicable limitation amount in the case of married individual filing separate. And the applicable limitation amount is set to be any taxable year beginning in calendar year 2025. So it does kick in this year, $40,000, and then 2026, 40,400, and 2026 through 2027 through 2029, 101% of the dollar amount in effect. So it's going to go from 40,000 to 40,400, and then another 1% higher, and then another 1% higher, at least for a few years. And beginning in 2030, we're back down to 10,000. So again, we have one of these sunset provisions, which I hate, but is what it is. Okay, so state and local taxes. If you are in a state that charges income tax, in the old days, we used to get unlimited deduction. So if I paid $50,000 to the state of California or the state of New York or whatever, I was able to include that as part of my itemized deductions. In the Tax Cut and Jobs Act, that was limited to 10,000 or 5,000 if you're married filing separate. Now, 2025 through 2029, it's going to be up to 40,000 and change with this 1% adjustment. However, there is an income limit to it. So phased down based on modified adjusted gross income. The applicable limitation shall be reduced by 30% of the excess of the taxpayer's modified adjusted gross income over the threshold amount, half the threshold amount for a married filing separate, and the threshold amount is for 2025 $500,000, in 2026 $505,000, and then that matching 1% rise with the 1% rise in the state and local tax deduction. Okay, the reduction shall not be reduced to less than 10,000. So if you're over $500,000 of income, modified adjusted gross income, then you're going to get at least $10,000 worth of state and local tax deduction, but it might be capped there. So if you're a high income earner, then that's going to hit you. But if you're in that in-between area, then this will be somewhat useful. Okay, and for purposes of MAGI calculation, again, the same section that we saw back in the seniors calculations for modified adjusted gross income, and this goes into effect 2025 through 2029. Okay, the sunset going back to 10,000 in 2030 kind of sucks. It is possible that there would be future legislation to adjust that because, as we're seeing here, one Congress cannot force another Congress to do anything, basically. Whatever was written before in some previous law, a new Congress at that future date can write whatever they want, this entire bill, modifying previous legislation that was already done. Okay, for people in those high tax states, that's going to be useful because people who are high income earners in those states were paying well in excess of $10,000, and now they're going to be able to deduct a little bit more. But this was a big argument because it's like, by virtue of the fact that you're deducting state and local taxes, you are in effect reducing the tax burden of those people to live in those states. And so people in other states are saying, that's not fair. Why do I have to pay proportionally more because so-and-so in New York or New Jersey or any of these high tax areas, because they're getting bigger deductions on their federal taxes just by virtue of the fact that their states charge more. That is going to be, it has been a fight for a decade and will continue because now those people in those states got more of a break compared to what it was, at least for a few years. So that is the SALT cap adjustment. All right.